Hello, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider if you don't hablo español, and I am super excited to announce the Art of Reading Price Section 30-day bootcamp. Now, I know you may be wondering, well, Tim, we just had the Art of Reading Price Action mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Section educational material. Phase 2 will begin our tape reading sessions. And Phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And Phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Bootcamp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off, and you can use that coupon code up until December the 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot. If you don't hablo español, y'all be safe out in these trade streets, man. Gone. Yeah. Yo. How everybody doing? I didn't get a chance to send out the back signal on the Discord. Let me send out the bat signal on the Discord. How y'all doing? Y'all go ahead and drop something in the chat so I can see who up in here. So I can, somebody said something, I stay popped up. Delivered just like you called it on live, Big Spider. Appreciate that, here learn and share. For those that don't know what I'm talking about, I'm looking at my screen over here, and I saw somebody had left a message in Discord, and when I looked at it, it said, delivered just like you called on live, Big Spider. Hey, man. I'm just some simple dude from Fort Lauderdale, Florida, who learned something from some guy from Maryland named Michael J. Huddleston. And I put in the work, and I look at the candles, and I say, y'all finish this for me, right? Ain't nobody in the Discord. If somebody in Discord, feel free to unmute and finish it. If you're not in the Discord, you in YouTube, type it in the chat. If price does this, y'all finish it.
Then price should do that.
That's it. If price does this, then it should do that.
With stacks on stacks and blocks on blocks.
Stacks on
Okay.
stacks on stacks on stacks.
All right, this stuff really works then, huh?
This stuff really works. It's somebody on Al Gore's internet charge you $19.95 for that. And y'all didn't even did y'all? Yeah, y'all saw my screen. Yeah, I showed my screen. I came back to the camera. Yeah, YouTube. I guess YouTube was they typing slow. All right, who in YouTube? Lumping YouTube and Discord. What's up, Marco? What's going on, Kim? What's going on, Tish? I see more numbers than I see names, but I guess don't nobody else want me to say nothing to them. Somebody sent me a DM. Let me take this off the screen. Let me see what this DM say.
Hey Tim, you mark your new day opening gap between the 445 or the what is it?
Hold on,
4
YouTube.
to 6 or something like that. How does that go?
Hold on, YouTube. Y'all, hold on for a second, YouTube. Hold up for a second, YouTube.
For me? Yeah, hold on, let me make it a little bit bigger. Okay.
Yeah.
All right, so if I'm going from Wednesday to Thursday, right?
Uh
The Wednesday is over at 4:45 or 4:59. When is it over with?
huh. For well, 4:59. It's over at
4:59.
5 o'clock. It's over at five
Okay,
o'clock.
but the
So if you're
last
looking at
candle
the
is four fifty
yeah,
nine.
the last candle, if you're looking at minute candles, it's gonna be that 4:59
Yeah.
candle. If you're looking at 15-minute candles, it's gonna be the 4:45 candle. It's gonna be, you know what I'm saying? So it's the last the easiest way, right? The easiest way to mark the new day opening gap, right, is to come to your daily chart. Turn this off. Right? Is to come to your daily chart, right? Make sure settlement is turned off, meaning that it's not highlighted in blue. And I'll show you what I mean by that, right? So you come to your daily chart, right? And make sure the settlement is not highlighted blue over here in the corner down there. Right down here, make sure that's turned off because when I turn it on, you see how that
The
candle moved.
which the BA DJ?
No,
Which
that
one?
you're if you see BADJ, you on the continuous contract. That's the adjust, right? It should be a SET,
I
right?
changed that to that.
Like if you see B, like let me see, NQ1 exclamation. Is it what is it? NQ1, what is it? NQ,
Exclamation CME Mini
oh yeah,
15.
MQ1 exclamation. Yes, MQ1 S. See, like you see B adjust on right there,
Yeah.
but then C is SET is right next to it, right?
No,
You
I
don't
got
want.
ETH to the left of that.
Are you on a daily chart?
Oh no, I'm on the 1 minute.
You know
Hold
what I'm
on.
saying? A daily chart. You got to go to a daily chart, right?
Okay. All
And
right.
then like you want your B adjust to be on, right? You want that to be on because that
But the
adjust.
set, you want the set to be white
You
or
want the
blue?
set to be white. right? You want the set to be off, right? Because when I turn it on, like look at this candle right here, right? That that 12-4 candle, right? Watch when I turn it on. You see how it went, see how it moved, right? Because the settlement price is the price at the end of the New York trading day. Like at 4 o'clock, whatever the settlement price they settle on for the end of the New York trading day, that's the settlement price, right? But when you turn settlement off, this is the end of futures trading at 5 o'clock, right? So what you want, the easiest way to market is to go to the daily chart, make sure settlement is turned off, and then right mark from the close of one day to the open of the next day, right?
Okay.
And then once you get that marked there, like if I move this over to just that day right there, now if I go down to a 1 minute chart, right? If I go down to a 1 minute chart and I go all the way over there to, because what I did when I moved it over there to the, let me go back to my daily chart, right? So what I did when I adjusted it to only be on this candle is putting it at the start of this day, right? And I want it to, because if I put it over to that candle, it's putting it at the start of this day. So what I do, I set it, and then I move it over to that 1 day, and then I go down to any intraday time, and I want to go all the way down to the 1 minute, right? Then I go over to the 1 minute, and then you'll notice once I come down, like you don't have to do this part, just marking it, that's good enough, right? But when I come down, now you see if I scoop this back, that's the 459 candle, and it's right where it needs. You see what I'm saying? It's right on there. But if I leave it, like, let me mark this 459 candle. I'm gonna mark that 459 candle right there, right? And then I'm gonna go back to the daily chart, and then I'm going to put it on that candle like that, right? And then once I go back down to the 1 minute chart, okay, and then I go back over to that, go back over to that, right there. See, if I go back over to that line, when I put that line there, that's where that candle is, right? That's the candle there that is, you know what I'm saying, matching up to that close. But when you look, the thing is like way over here, because it's at the beginning of that day. See, it's all the way over here at 6 o'clock p.m. You see what I'm saying? It's all, and I don't like mine to be sticking out there like that. But that's why I go back down and I adjust it. But you don't have to go in there and do that. That's just my, you know what I'm saying, my OCD be acting up, because I want it to be right on the I want to be right on that candle. But that's the easiest way to mark it out, by just going to the daily chart, making sure that the settlement is turned off, and just mark it from the close of one candle to the open of the next candle, and that'll give you your new day opening gap. And if you go from Friday to Monday, that'll give you your new week opening gap. Just make sure the settlement price. And if I turn that settlement price on, you see how the New York settlement price is way up there, right? That's not your new day opening gap, right? What you can use that for, if you're looking for, if it's got like a larger volume imbalance, right? This ain't a volume imbalance, so I can't really show it there. But let's find one that has a. Okay, here, right here. These two candles right there, right? This right here, like if we look at from the close of this to the open of that, that's your new day opening gap, right? Coming into the 6 trade, and this the new day opening gap for the 6. But if you turn the settlement on, this is the complete volume imbalance.
Okay.
Right, that's the complete volume imbalance in between those candles, right? Because that's the New York settlement, right, to the new future open. And so sometimes what Michael does is, if he's looking for the larger of the imbalances, right, he'll look at the volume imbalance if it's larger than the new day opening gap, right, depending on how price is trading. But that's,
and you go from I see you going from the body of the candles and not the wicks.
That's because this like the volume imbalance is when the bodies don't overlap.
Right.
Yeah. Yeah. So
So with
when
the new day opening gap, you going from the wick or the bodies?
the opening, no, the open, the close to the open, right? You going from it's the bodies. You going from the
The bodies.
close of
Okay.
one candle to the open of the next candle. It don't matter what the wick's
Okay.
doing.
Okay.
You going from the close to the open for the new day opening gap, right?
So on the 459, it'll be at the top of the green one and at the top of the red one, right?
For you talking
No,
about
no,
for
no, no.
this one up here?
I'm looking at the 1 minute. I didn't even.
Yeah, I'm saying
I
you
was
talking about
saying,
yeah the one that was over here. Yeah, it was
yeah, it'll start at the top of that one and at
yeah
the
I think
top
it
of.
was a
Okay.
I think it was like an up close candle there.
Yeah, the
Yeah.
459 is an up close candle.
Yeah, so it's gonna be at the top of the candle. Yeah, cause it's gonna go from the and both of these is gonna be the top of the candle, cause it's from the close of that candle there to the open of that candle there. All right, so that's your new day opening gap for that data for the
And
for the
that's
fifth.
bearish new day
Yeah,
opening gap.
a
Okay.
bearish new day opening gap, and then you date it for the like the fifth, because you see it's like the fourth at 6 p.m. But this is for the
Uh,
fifth. This for December 5th's trading. Cause the future start trading at 6 p.m. the night before. So this is for December the 5th's trading. So that's the new day opening gap for December the 5th. All right. And then when you look at the one that we just got, right? That the one that we just got, if we go back to the daily candle, right? Go back to the daily candle here, and then so for the close of the trading from today, it go from the close of there and to where price just opened up just now, right? And that's gonna be the new day opening gap for December the 6th. This is December the 6th new day opening gap, right? And then if we go down there, and then we can see here that this candle here opened there, right? And this candle there closed there, and that's a bearish new day opening gap also. We gap down right there, opening there. So this is the new day opening gap for December the 6th. Even though this candle dated for December 5th at 6 o'clock p.m., that's the start of December 6th trading day. Got it?
yeah, I got it. I'm good with that.
Get it?
We're
Got
just
it?
going to get it started.
All right. Okay, everybody. We're gonna go ahead and get it started. We knee deep into class participation time, I guess you would call it. Q&A type stuff. I didn't even get a chance to say good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spot if you don't hablo Espanol. And you are in tune to another episode of the Intra-Day Price Action Recap. Shout out to everybody who pulled up in the chitty chat. Shout out everybody from the gang who pulled up for the midday pop up today. Hopefully y'all got something out of it. The midday pop up was recorded. Y'all can thank Kashaya. Y'all can thank Kashaya. The midday pop up was recorded. What was I gonna say? I lost my train of thought. Shout out to everybody that signed up for the boot camp thus far. We still got 14 slots available. 14 slots available. If you're in the gang, you got a 75% off code inside the Discord. If you're not in the gang, there's a 50% off code in the description there. It's SPYDER50 Spider 50. Right? Spider 50. is the code if you're not in the gang to get 50% off for the boot camp. I am pinning the link to the top of the chat if you are interested in participate. It's a 30-day boot camp starting January the 1st, right? 31 days. It's 31 days in January, but it's for the whole month of January, Monday through Friday. It's the Art of Reading Price Action Boot Camp, right? We're gonna go through. Let me see. I'm gonna put a poll in the inside the Discord for the members of the that's already in the boot camp. I'm gonna put a poll in there to see if y'all want the phase 1, the educational part, to be in the evenings, or do you want it to be in the mornings? I'm gonna put a poll in there with different times. Right, I'm gonna put a poll in there with different times and whatever the whatever gets the most votes, that's what we'll go with phase 1. That's the educational part of it, the part when we're going through the educational material. All right, let's get to it, man. Today, right? Today was interesting. They said thank you because I said the pop-up was recorded and y'all can thank Kashaya. I didn't say why they can thank you. I just said they can thank you. If you want to share why they can thank you, it's up to you. But I just told them they can thank you for the pop-up being recorded. Okay, so looking at price today, right? Let's look at price, right? Let's just peek at price. Let's break it down like this. Look at, oh, I went too far. All right, starting at the beginning of the day, right, all the way over to here, right, all the way over to there. Then we're going to look at it. Let's change the color of this pen. Uh-oh. Then we're going to look at it from here. Let me see, from there. All right, this part right here. Just circle all of this. All right. Then we're going to look at it from here. Right? So, for the overall day, right? For the overall day, okay? What type of day, what type of trading conditions will you say this overall day was, the entire day? Just looking at the entire day. What type of trading conditions would you say this is? Conditions. What type of trading conditions looking at this overall day? Right. high resistance. There you go. High resistance. If you look at this entire day, it's typical high resistance, right? And then if we look at only the New York session, starting at the New York kill zone, right? If we're looking at the New York kill zone here, right? Just looking at the New York morning session, right? This little area there inside the black part that I marked out, right? What type of conditions is just the New York morning session by itself? What type of conditions is that? No, you can't say trash. Seek and destroy. Very good. Right? And then the afternoon, right? We kind of melted off, but it's still that high resistance because we got a bunch of overlapping candles. Right? So what's the characteristics of high resistance? Right? Somebody give me the characteristics of high resistance.
Overlapping candles and deep retracements.
Very good. Overlapping candles and deep retracements. Right? What's the conditions for seek and destroy? Highs and lows taken. Yeah, that's it. Take buy side, take sell side. Take buy side, take sell side. Right? Here we go. Right? Dropping down below the sell side, go above the buy side. Drop below the sell side, go above the buy side. Drop below the sell side. Seek and destroy. Right? Overall day, high resistance. High resistance in the beginning, high resistance in the afternoon. The overall day is high resistance because we got overlapping candles. Right? We got deep retracements, right? Deep retracements. The overall day got deep retracements. Whenever it move in a direction, right? It move up, give you a deep retracement down, right? When it move down, giving you a deep retracement up, right? You got these deep retracements in the overall day, but the New York morning session itself, that was seek and destroy. Right? Buy side, sell side, buy side, sell side. Right? Going from buy side to sell side, buy side to sell side. Y'all give it up for Shonister. Y'all give it up for Lump. Y'all give it up for Here to Learn and Share. Y'all give it up for Tish. Y'all give it up for Kashaya for pulling up with the hard hitting answers, man. Stacks on stacks on stacks on stacks, man. We sprinting now. We sprinting now. You feel me? All right, so we did a pop-up today, right? We did a pop-up today, and the pop-up was basically talking about engaging with the market from a educated standpoint on what price should do and making a decision to trade with the narrative. What's up, cuz? Trade with the narrative or trade against the narrative, right? Excuse me, right? Because we talked about if price does this, then it should do that, right? So when you're in high resistance conditions, when you're in seek and destroy conditions, and you understand the characteristics of those environments, right? Then it goes into these high resistance and seek and destroy environments when they're manipulating price. And you have to understand, when are they likely to manipulate price, right? When is the Fed most likely to manipulate price? Somebody tell me, when are they most likely to manipulate price? Take a guess. Somebody take a guess. It could be in the chat. It can be in the Discord. Somebody take a guess. When is the Fed most likely going to manipulate price? Come on. Come on. We've talked about it. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. Am I frozen? Am I frozen?
Nah, you ain't frozen. We see your Google screen, but I don't know the answer to that.
Yeah, I'm not moving though.
I see your mouse moving on your Google screen.
But I'm not moving. You see
What you
me in
talking
the
about on YouTube?
You see, Mom, I'm saying, you see me in the corner down there. I'm just looking. I'm still.
Well,
Like I'm moving. I'm waving my hands right now.
okay, yeah. You are.
I'm not moving. What is going on? Yeah,
Well, ask that question again. What you say? I might have at it.
I said, when are the feds most likely to manipulate price? Okay.
You know, at the smart money reversal or something. I don't know. I guess when they drop the news,
I see somebody put in the chat. Fed
time.
meetings, NFP, CPI, PPI, news. That's it. Yes, new ahead of news, right? They will manipulate price, and they will use the news to manipulate price, right? So you want to know when are important economic events on the calendar, right? And you want to know, how does the market trade around these events? Y'all shout out I think that was E-Rock. Y'all shout out E-Rock, right? E-Rock got the only one that she, oh no, it's on the NFP right there. E-Rock got the holy grail up there. Y'all shout out, y'all give it up for E-Rock, man, with the hard hitting answer. Right. We got Fed meetings. Those are FOMC meetings. When you hear people talk about FOMC, that's the Fed meetings, right? When you hear people talk about NFP, right, that's non-farm payroll. On Econo-Day, for some reason, it's titled employment status, right? But when you go into it, you see over there, that's the non-farm payroll, right? So non-farm payroll, CPI is the wig snatcher of all wig snatchers, and PPI, right? And GDP, sometimes GDP can get crazy too, right? Sometimes GDP, but like the main ones, FOMC, non-farm payroll, CPI, those are the big ones. And when those are coming up, that can affect the entire week of trading. CPI will affect the entire week before, like any day, whatever day CPI fall on. If it fall on a Wednesday, Thursday, or Friday, if it fall on a Wednesday, Monday and Tuesday probably gonna be trash. If it fall on a Thursday, Monday, Tuesday, and Wednesday probably gonna be trash. It like FOMC, non-farm payroll, CPI mess up the whole week. They manipulate price the entire week, right? And what do we have tomorrow at 8:30? Right? We got non-farm payroll tomorrow at 8:30. Right? So it can affect the entire week, but the day prior, you can really expect it to affect it. It don't have to. It don't have to. If they got to get something done, they will let the algorithm, they will use it to, they'll move it where they want to move it. But in the case where we've already hit a higher time frame, anticipatory reactionary point, like we just hit all-time highs, right? They'll just hold it in a range until that information come out. So you can expect that fancy trash, that garbage. You can anticipate that garbage. So when you're anticipating garbage because of what's on the calendar, right? And then the algorithm starts giving you the signs, right? Throughout the night, we had high resistance, right? And coming into the New York morning, right? We've already been dealing with high resistance. So now we're anticipating it to give us some high resistance. And then when we get here, right around, let's say 9:30ish, like 9:30, 9:45, right? Now we can see, wait a minute, right? We done moved into like a little seek and destroy type thing, right? Because we came down over here, right? We dropped down, God dog it, right? We dropped down below a low right there, right? Then we came back above the high, right? And then we went over there and we dropped back down again below that low, right? Then we came down again below this low over here. So now we like, okay, we took sell side, we took buy side, we took sell side. Wait a minute. This don't look like no McDonald's, right? So now we can say, hey, we're in seek and destroy now. So if we're in seek and destroy, what does that mean, right? If we're in seek and destroy, we got to be nimble. We got to be quick, right? Because when we're looking at our range that we're in, right? That's our high, that's our low, right? That's our range that we're in coming into this day, right? Right? We see our range that we're in coming into this day. And then we see as we're coming over here into 9:30, right? We go up and we engage with the buy side, right? We come over there, we engage with the buy side, and then we come back down, boop, right? Engage with this sell side down here, and then we go back up and we engage with this buy side up here. Then we come back down and we engage with this sell side right there, right? So at no time are you going to, cause over here, this is when we expected, oh, we done moved into a seek and destroy right here. So at no time are you trying to force your will on the market of, okay, we've come here and got us a Judas swing here, right? We went up, we went down. We got us a Judas swing here. So now I want to see price come down to the low, right? But price is showing you here it's in seek and destroy. So now you have the option to say, okay, if I want to engage with the market here and we've taken out this sell side and I'm anticipating price to come down here, I know that price wants to go back up into a premium to sell down to there, right? But since we're in seek and destroy, I don't want to sit here and guess how far we're going to go before we come back down, right? How far are we going to go to this high? Are we going to go to that high? I just know we're going to take out a high somewhere, right? We're going to, because we're in seek and destroy. So we're going to, I'm not going to guess on what high. I can then look for opportunities because I know price is going to go back to a premium because it showed me that it's bearish and it should be drawn toward that liquidity. I know it's going to go back to a premium, so I can look for signatures to give me an opportunity to trade against the grain, right? And since I know it's seek and destroy, if price has shown me seek and destroy when it take out the sell side, it should try to engage with some type of buy side if the seek and destroy profile stays intact, right? But I don't want to try to bank on a seek and destroy to give me a high, right? Because the seek and destroy is playing out because somebody is in there pushing the button and making the algorithm, you know what I'm saying, switch. Like, okay, switch. And I don't want to bank on when they're going to stop pushing that button, right? But when they hit the button, the algorithm only knows how to be the algorithm. So it's going to give you signatures no matter how many times they push the button. It's going to give you signatures that you can identify and then engage with, right? You say, okay, Tim, it sounds good. It sounds fancy when you're saying it, right? We already went through it today during the pop-up, but just to show you what I mean, we're going to come here to, right, we got, this is the 955 candle here when we came down, dropped down here and took out that sell side right there, right? So this 955 candle, we dropped down and took out that sell side right there. Okay, like we said, if we get the Judas swing right now on this time frame, this is the first sell side you see it, right? On the other time frame, this was the first sell side you see it. Okay, so we got our Judas swing here. So now at this point, I know that price is going to go back to a premium because it wants to engage with this sell side. If it doesn't take this sell side out immediately, I know it's going to go back to a premium. Price has already shown me we've moved into a seek and destroy pattern, right? It's showing me we've moved into a seek and destroy pattern already, right? So since we've moved into the seek and destroy pattern, now I know it can possibly come all the way back to this high, right? I know it wants to go back to a premium. So at this point, I can say if I see some type of entry that's going to yield me the profits that I want, I can take it back up here to the place where I know it's going to go. Because if price does this, it should do that, right? Right? There we go. If price does this, it should do that. But since it's seek and destroy, it went all the way up there before doing that. See? Judas swing, right? This retrace here, if it wasn't seek and destroy, it should have stopped there or even down here and did that. But since it was seek and destroy, it went all the way up there and then did that. If price does this, then it should do that, right? So when price did that here, I said, hey, price did that. I know it's going to go back to a premium because it didn't take out that low. Once it gave me the setup, right? Now, let's go here. I'm going to put a little squibbly there, right? Go down to a 1 minute chart, right? Go down to a 1 minute chart there. This is just a quick recap for the non-gang members and then the gang members who miss the pop-up. All right. Now, remember I put the squiggly there, right? Remember I put the squiggly there. Now looking at the 1 minute chart. Okay. Remember, this was the next sell side that we was looking at because price dropped down, right? Took out the sell side and then it didn't take that sell side. So now since price did this, then it should do that, right? See that? On the 1 minute chart, and where did it go? Right there to that sell side before heading back up, right? Because we got our Judas swing, right? And we said if price does this, then it should do that, right? I don't want to sit through this. I don't want to figure out how they're going to manipulate it. So guess what? Guess what? When price came down below the low, and then we traded up right here, and I got a change in the state of delivery right there with a BISI right there, I got long right here. This is where I got long at, right? And traded it back where? Back to this imbalance right there. Boop! Quick little 15-point move right there to this imbalance. Why? Because I know that since price did this, it's going to go back to a premium so that smart money can sell into the target. Right? Since I know it's going to go back up there, I just ride the train back up there. I'm not going to try to force a seek and destroy out of it because I don't know if they're going to let the algorithm do its thing. Right? Are they going to let the algorithm come back down? I don't want to take that chance and try to get short and I know they manipulating price. Right? But when the algorithm give you signatures, you know the algorithm wants to do this. So if the algorithm wants to do that and they're manipulating price, right? When the algorithm does this and it doesn't take that low immediately, it's going to go back to a premium. I wrote it back to the premium. There you go right there. If price does this, then it should do that. When you understand how price move, you can engage with the market educatedly, right? What if you take a loss? You take a loss. That's why we got risk management. But when you understand how the algorithm works, right, you can decide, do I want to engage or do I not want to engage? And when you decide that you want to engage, do I want to, right, trade with the narrative, right? Or do I want to trade against the grain? You can make those decisions because you're not just getting in and hoping price will go somewhere. You're getting in educatedly knowing that price will come back. How does price move? From liquidity to imbalances. We traded to liquidity. It gave you opportunity to come back to an imbalance. Right? Who got anything for me? What's up, live prop firm trading? The market is treating everybody fine. Welcome, live prop firm trading. I'm glad you're here. If this your first time tuning in, welcome. If it's not your first time tuning in, I truly jolly pies. I just don't remember that name. I try to remember the names, right? So thank you for popping in. Anybody got anything for me, man? That's it. That's it. That's all I got. Was this helpful? I know we talked about a lot of stuff that we talked about in the pop-up earlier, but since the pop-up was just for the members, I want to kind of give a quick recap of what we talked about in the pop-up for everybody on the public channel. Ain't nobody got nothing? Huh? Question about standard deviations. That ain't a question. That ain't a question. Don't be typing no dissertation. If you type a long question, unmute and talk. You know my reading don't be reading. That little bubble been bubbling a long time, saying that you typing. You at piano practice. How you at piano practice and you typing? Oh, your daughter? Well, you ain't unmute and talk. You ain't the one that's on the piano.
All right, I'm gonna send a chart. I just wanted to know this particular chart. Do you want me to put it in the main chat so you can see?
No, just put it in the voice chat right there. That's fine.
Okay.
Just put it right there and I'll put it up on the screen.
All right. So on this one, where do you run your fibs from that highest pullback at that very top, or do you come down to where that lowest swing low?
You talk about this. You talk about this one right here.
Yes. See,
All right.
so the 15-minute chart. So originally, I think I ran them from that highest high, but then obviously, today was like we said, a high resistance day, and it stretched longer. But that's my question when running these, even because it was that pullback right before it went higher at the very top. And so I don't know if you run it from there or do you come all the way down.
The first thing is, what are you running the field for? What are you looking for? Are you looking for? Are you trying to get a projection of how far it can go? Are you looking for equilibrium? What are you running the field for?
I was trying to get a projection of how far price could go because at the very top, I don't know if we even really. I kind of considered that a break at that tip because before we went and made that high, we pulled back with those two candles and then we broke it. And once we closed below it, price came back up and tapped it before going down. So yeah, but to answer your question, just trying to see for projection about how far price could go.
Okay, so with that, you want to. Okay, I don't want to overcomplicate it, but it ain't no quick simple answer, right? And when you're doing your field projections, you're not doing it to just to see how far price can go, just to see how far it can go. You're doing the field projections for once I get into a trade, what can be my target? You understand what I mean? Like you don't want to try to run a field to get field projections just because you want to know, man, how far is this gonna go before it give me a pullback or something. You're not doing it for that. You're running the field projections for, okay, now price has given me a setup, price has given me an entry. Now I want to know how far this can go, what can be my target, right? So I'm using 1 minute charts here, so it really don't matter what chart you're using, right? So if you're looking at this here, right, you like okay, like I said yesterday, the easiest way to figure out where to anchor your fibs at is look at where price turned around, right? Look at a spot where price turned around. If you can't readily identify, right, the institutional market structure, right, with the little smiley face, and know I need to anchor it on this low right here, right? If you can't readily identify that, then just look for a spot where price turned around. Like where did it turn around at, right? And then that'll let you know, okay, this is a place where I can anchor my fibs. Like looking at this here, we see price turned around there, but that's also a place where we got the institutional structure, where we got a swing low, and a swing low that form a swing low, right? So that's where you want to anchor it at. So you go from this low, right, up to the first high to the left, right? And you're going to run your projections from there. But you're running these projections, right, to see once I get into, like, I think this is like the institution the spot where the institution is turning price around. Once price like comes here and gives me an opportunity to enter, I want to see how far this can go, right? And these are my areas that we're looking at, right? And see, that's your deviation that's above the thing. So that's your target right there, right? This is the high right there. In the deviation that's above that high, that's your realistic target of a price where you can shoot for a realistic target of, okay, I'm going to get out at 21,554 and a quarter, right? Because that's the deviation above that high, right? You're not coming in and watching price and saying, man, price running. Let me see how far this can go, right? You're not going to go in and just grab your fib tool and be like, okay, let me come in here and just pick this swing low and swing high right here and say, let me see how far this can go before it stops. You know what I'm saying? You're not running it like that. It's like you want to use the tool for the correct reason, right? You're not just reaching for a tool just to say, hey, let me see this, how far this gonna go, right? That ain't really how you use it, but you anchor it at you know what I'm saying, institutional structure, right? Institutional structure where, okay, the algorithm has given you, right, this is the spot where it's turning around right here. And so now that it's turned, now we know this is the spot where it's turning around. So when it retraces back down, I'm gauging it off of this price leg, how far my trade can go, right? Because this is just the algorithm. This is the entire move, but this is the algorithm giving me the retrace. Because remember, we got consolidation, expansion, reversal, retracement, and then delivery, right?
Right, and that makes sense. And I usually will anchor it off that last manipulation leg down and project. And what
Yes.
I studied, and like I said, I'm trying not to, like I said, I don't want to put something to habit or memory, because what you're showing me is a little more consistent. So usually I would run it off of that, and then theoretically that turning point has been 2 to 2.5 standard deviations. And then if it closes over so 2.5, you can maybe expect it to run to like 3.5, 4. But I don't want to be learning something that's incorrect, because what you're showing me actually was a better projection, especially at all-time highs. It actually went into that 1.5 area where it's known to either consolidate or do a slight retracement for entry. So
Mm-hmm.
that's why I was asking you, because
Yeah.
I don't want
And
to, like I
a
said,
lot of the
keep.
stuff, a lot of the stuff that we've learned over the years,
Uh-huh.
it's rooted in truth, but it's like missing little nuances to make you be able to engage the market with total confidence. You see what I'm saying? Like, it's rooted in truth, meaning, like, okay, we're anchoring it on this last manipulation leg here, right? It's rooted in truth there, but when you start getting into stuff like, if it come here, then it should go there. If it come, no, that's, you're just guesstimating now, right? Because until the market shows you that it wants to go there, meaning if it creates another form of structure where now you're looking at, like, just say this leg here, and it's still showing you that it wants to come here based off what it's doing, then you can say, okay, now I got a high over here, and based off the signatures is giving me, now we can expect to come to and then you see here, right? And remember when I told you how to test it? Do you remember when I said how to test it yesterday? When I said, if this is the leg where we're in it, you can go to your entry leg, right? You can go to your entry leg and then test it. And when you have those areas that's in close proximity, like this is the deviation that's above the high, right? And then you got this one standard deviation that's in close proximity to that. And that's how you can test and say, okay, yes, now I got a realistic area that I can shoot for taking my profit, right? Because this was the entry level. I mean, we had a consolidation, expansion, reverse, retrace. You're entering on the retracement leg. So the manipulation leg and the retracement leg, they both got standard deviations in close proximity. And look where price went, right there, right? That gave you a good, because the algorithm. They can't stop it from doing that. They can hold it. They can keep it from running, but you see, when price did this, then it should do that. And where should it go? Right around here. Where did it go? Right around there. They can't stop it. There is an algorithm.
Okay, that makes sense. So that's what I will start practicing and testing, is running it on that entry leg, because usually, like I say, it's just been that manipulation leg, and sometimes I'm left wondering, okay, why didn't price get to the two, so to speak, level? And this makes sense. So thank you.
Yeah. And also, a lot of stuff, when it comes to when they're manipulating price, like I say, they can't stop the algorithm from giving the signatures, but they can stop it from completing the task. Meaning, right, when price, like I said before, when price wanted to come here, right? Price showed us that it wanted to come here, right? So when we retraced back up, right? When we came here and retraced back up and start to come down, right? The algorithm should have never went back above these highs right there. So what they did, they hit the button here and stopped it from coming there, right? And then when it went back up there, now the algorithm is showing you, I want to start going higher now. So once we got up here, the algorithm wants to go higher now. So they hit the button again, right? And then it came back down to where it initially wanted to go, right? Because once the algorithm shows you that it wants to do something, it's just going to keep doing it until it reaches its target, or until somebody hits the button, right? Until somebody hits the button. And as you see, when we had our breakdown here showing that we want to go there, right? When it started going there, they stopped it, right? And then we went back up. Now it wants to go up. And then once it got up here, right, they stopped it again. Because then we dropped back down and took out this low, meaning we want to come back down there now. But this time, right, it eventually made it down there. right? The same thing it wanted to do over here, right? Because no matter how many times they cut it off, in between those cutoffs, the algorithm going to give you signatures of what it want to do. And then you just have to identify, where am I going to participate? When am I going to get out? How long am I going to hold it for? Because I don't know when Uncle Powell going to hit that button. I don't know when he going to hit that button. All I know is, right, when the algorithm give me this signature, it should go back to, we took out liquidity. Okay, we went back to an imbalance. I'm out. I'm getting out right there, because it already showed me that it want to go down. So if I'm trading against the grain and I come back into an imbalance, okay, I'm getting out. I'm not going to try to go all the way up there, right? We took out liquidity. We moved back to an imbalance. That's another type of imbalance right there. New day opening gap. Liquidity back to an imbalance, right? Came down, liquidity, right? Then we came up. We got us a wig snatcher there. Liquidity, then back to the imbalance, right? That's the wig snatcher. Go in the right direction, come back up, take people out, then make an imbalance, trade back to the imbalance, and then drop down, right? Quick little wig snatcher there, right? But I know you didn't ask for all that, but hopefully that makes sense about when you run your fibs. Running your fibs, you wanna know exactly, why am I should say this all the time. Why am I reaching for this tool? Right? Am I reaching for this tool because I think it's some kind of magic power in this tool and it's going to give me something that I'm not seeing in the charts? Or am I reaching for this tool because I understand the signatures that I see, and now I want to have a educated point of where I want to get out of my trade? Right? Am I doing it because I just think if I put this fib thing there, it's some kind of magic power in the 0.625, right? I think if I come on here and I put 0.62. If I come on there and put 0.6, let me put a negative on that. Right? If I come on here and I put that 0.2, I think it's some kind of magic power in that 0.62 right there. That's magic power in that 0.62. No. You're hoping this fib give you some kind of magic power, right? And you just got lucky and anchored it at the right spot. But when you know why you putting it there, when you know why you're looking for that deviation, right? I'm putting it there, right? Because price has taken out liquidity. It's shown me that it wants to go higher. When it goes higher, when it reverses, what is it going to seek? It's going to seek the opposing liquidity, right? So if I run my fib on this lowest leg, this manipulation leg there, where we created this institutional market structure, right? Got us 3 swing lows that create a swing low. I'm hooking it there. That's where you anchor it, right? Where's my deviation that's above the opposing liquidity? That's the deviation right there. That's why I'm choosing that price. I'm not choosing that price because somebody said 0.62 was the golden spot for trading and blah blah baby blah. I'm doing it because of specific algorithmic reasons. And I can do this over and over and over. I can't guess on will it hit the 62 over and over and over. I can do this over, and I can repeat this, right? This happened, run my fib there because I got a break in market structure. Price is telling me it want to go to the opposing liquidity. I can do that over and over and over and over because I got a set of rules of why I'm doing it. And I'm not just guessing that somebody said, hey, 0.62 is a good place, da-da-da-da. Hey, this 0.5 is a good place. Why is 0.5 a good place? 0.5 is a good place because 0.5 is fair value, right? 0.5 is fair value. Why is it fair value? 0.5 is in between the highest high and the lowest low, right? 0.5 is in between the highest high and the lowest low. Yeah, I'm about to go to the gym. You about to go to the gym? Yeah. Okay, drive safe. Right, 0.5 is in between the highest high and the lowest low, and if we find me a range here, God dog it. I need to spread this out so it can. Okay. Get on there. All right. So, right, if we look at this range here, right, if we look at this range from the highest high to the lowest low, right, if we look at 50%, right, price is consolidating around that 50%, right? Why is price consolidating around that 50%? Because this is fair value. What makes that fair value, right? This is your highest high. This is your lowest low in this range right there, in that dealing range. Anything above this, you're paying a premium. Anything below this, you're paying a discount. So right there at 50%, you're neither in premium or discount. That's fair value to everybody. So price will hang around fair value given the algorithm time to allow for sell, buy side and sell side to accumulate in the market. And when it's time to move, then the algorithm will engage the opposing liquidity to attack the draw on liquidity, right? And so we see here, we know that price has been bullish, right? We got us a range. Price is consolidating in this range. When it's time to move, the algorithm traded below this short-term liquidity right there. Why did it trade below that liquidity? Because there was enough sell stops that were trailed from here up to there to suffice the algorithm when it dipped down below that low. It gave it enough sell stops had been trailed from here to there. Why? Because retail was seeing this area right here, right? It was seeing this area right here as an area of support. Why? Because we came down to this area, right? Got down below it there, then we got back above it and couldn't break back down. So now trailed their stops from there to there. Because when we got there, we sprung back up. So now it's enough stops trailed under there. The market drops under there. When the algorithm hits all those stops that was trailed up there, pang-ow, break above there, right? We've been consolidating at equilibrium, break above there, right? So now the algorithm got enough money there to say, I don't even need to come back down because it didn't even come back into this balanced price range and it went to where? Picasso's house. Right? When you understand what the algorithm is doing, then you know how to reach for the tools and use the tools based off of what the algorithm is doing, not based off what this old head that trade on coulda, shoulda, woulda, giving you all these fictitious reasons of why these tools working and why that, why this and why that and why this and why that, right? If you understand what price is doing, you don't need, like, if you look at with this right here, right? If you using something like a RSI, right? I bet money when price was right here, right? The RSI was saying that the market was overbought, right? And if you're looking at RSI, I bet money the market was overbought up here. And if the market overbought, guess what RSI traders are going to do? They're going to try to sell, right? They're going to try to sell. But since you know that the draw is up here and the algorithm has engineered liquidity, it took out the sell side, displaced up, you know it's ready to go attack that buy side. But your RSI might be telling you it's overbought right here. We need to sell. And it's overbought, so you're going to be trying to sell down to that low right there. And then you're going to get in. You're going to get in right here. And you're going to sell down. You're going to be happy. Then your head going to get bust. Pow! My head just got bust. Right? Anyway, y'all didn't ask for all that. I got caught up. All right, Jolly Pies.
No, that was excellent explanation, and like you said, combining that after you understand what the algorithm is doing, and then using it for confluence.
Yes. You want to reach for that tool. You want to, if you need to drill a screw in, don't get a hammer and bam that screw in. Get a screwdriver, right? You want to know why you're reaching for the tool. Yeah, that's what messed me up. What messed you up, Kashaya? What messed you up? What you talking about? Do you trade NFP? I trade any day that it gives me a setup. If you still here, live prop trading, any day that give me a setup, I trade it. I just don't trade during the news. Like when the news is getting ready to come out, I let the price do what it's gonna do, and then I go and look to see if it's any scraps for me to pick up off the floor. Price went back up to take out the high again. Okay, yeah. Seek and destroy. Good old seek and destroy. On days like this right here, high resistance, seek and destroy. Don't spend a whole lot of time in front of the charts. Don't spend a lot of time in front of the charts. What time did we do that pop-up today? What time was it when we did that pop-up? Let me see here. What time was it when we did that pop-up? I stay popped up. Where's the I stay popped up right here. Oh, there it is. So it was like 10:30ish. It was somewhere around 10. 10:29. I said pull up in about 5 minutes. I feel like talking, right? So at 10:29, I was done. I was done. I was done trading. My trade, I think I traded off of the 10 o'clock Bissy, I think it said. What didn't I say it was like the 10 o'clock Bissy? Right? So I wasn't in front of the charts a long time. Yeah. I wasn't in front of the charts a long time. And when we traded back up, we traded back up to that fair value gap right there. So what's that candle right there? Right over here. So right there, that candle right there is the 10:02 candle. Right there, that's the 10:02 candle, and I got long off of the 9:59 Bissy. Right, so I got long off the 9:59 Bissy, and then my target was hit on the 10:02 candle. Right there. So from 9:30, right. So, cause the day I came in, right, and I started watching it, it was, I think we were somewhere. Where were we? What time did I pop into Tremaine thing? I know it was after 9:30. I think we was over here somewhere. Right, I think it was over here. But let's just say 9:30. Right, so from there over to here. Right. So this is right there. So that's the amount of time that I was actually engaged with the charts today and looking for opportunities, right? That's 32 minutes, right? And that's looking for opportunities and being out of the trade, right? 32 minutes. And after I got that opportunity, I closed out my Ninja Trader, you know what I'm saying? And I said, hey, y'all pull up. I feel like running my mouth, right? And start talking about what was going on with the gang. You know what I'm saying? Distract yourself. Get away from the charts. Figure out a way to make yourself stop staring at the charts, because staring at the charts is not, what is that? What's a picture? Oh, those are pictures. I'm like, what is going on? I'm like, what's all that over there? Right, staring at the charts is not going to make it yield what you want. Right, if you don't understand how to trade in these conditions, if you don't have patience, if sitting there staring at it, it's just going to make you make stuff up. right? So on days like this, if you don't see anything, if you don't feel comfortable that I'm seeing the signatures, just leave it alone. Leave it alone. Wait for another day, because it's difficult, very difficult trading in conditions like this, right? But like I was saying, if you've gotten to the point where you know how to interact with the market during days like this, go in, lower your expectations on how much of a run you're going to get, right? Don't look for the 50, 60 point runs. Go for 15 points. Go for even 10 points. Go for smaller, because putting some money in your pocket, right, is better than fighting the market and losing. You know what I'm saying? You want to force a 50-point run, right? I got a 50-point run, so you can go put it on Twitter and look like the best ICT trader in the world. Lower your expectations and put money in your pocket. This is our job for many of us. This is our job. Secure the bag, right? But do it in a manner that makes sense. I'm just babbling now. I'm about to go, y'all. I don't see no questions in the chat. I don't hear nobody saying nothing in the Discord. So we're going to go ahead and call it. Remember, the boot camp, we got 14 slots left in the boot camp. For those that's interested, we got a link pinned to the top of the chat, right? I just clicked on it, and this is the link. It takes you straight to the checkout page, right? It takes you straight to, let me see if I can put PDub over there like that, because it take me straight to the checkout page, because I got my I ain't putting the whole thing over there because it's showing my last four. All right, so this is the art of reading price section. For those that's not in the gang, you got a discount code of SPYDER50 Spider 50, right? It apply and it takes 50% off. That code is good until December the 14th at 11:59 p.m. Those in the gang, you have a 75% off code that's inside the Discord, right? So it would be $250 for the gang. It's running for the entire month of January. Every day, Monday through Friday, we're going to be doing something. First phase is the educational part. We're going to do a total revamp of the art of reading price action learning material. It's going to be with the slides and me going through it. I'm going to put a poll inside the Discord for those that's already joined to see if you want to do the educational part in the evening or in the mornings. And then phase 2, we're going to start the tape reading, right? Phase 3. And phase 3, we're going to move into trying to help those who can't come up with their own model, help them develop a model for what they can see easy in the price. And then phase 4, we're going to move into, we're going to continue tape reading, continue Q&As, and we're going to start to schedule the 1 hour one-on-one coaching call with me and each person. Each person in there going to get a 1 hour one-on-one coaching call after the boot camp is over. And then, you know, if you're not already in the gang, you get to stay in the Discord so you can have access to me and all of my random pop-ups for 6 months after the boot camp is over, so we can keep helping you along your trading journey. I'm not just gonna teach you and throw you out there to the wolves. Gonna keep you under the wings for a little while to help you out. Again, pin to the top of the chat. First link that's in the description of the video. Yeah, man, that's it. I appreciate y'all for hanging out with me, man. You could have been anywhere else in the world, but you chose to be here with me. And Today is Thursday. Tomorrow, me and my sweetie going out. We got having date night tomorrow, so I will not be doing a price action recap tomorrow. If I'm not busy this weekend, if I'm not busy Saturday, then I'll probably do like a recap with the gang on Saturday. But if not, then Sunday is the it's the second Sunday, so me and the mentees will be doing Q&A, and anybody that's signed up for the boot camp, you'll have access to that Q&A. Like, the boot camp don't start until January, but anybody that's signing up now, you got access to the Sunday evening Q&As. That we got two more. We got this Sunday, and we got the 15th. Right, this Sunday and the 15th. We got two more Sunday evening Q&As that everybody that signed up for the boot camp so far, you will be able to participate in those also. Since you already signed up, I said, hey, might as well get a chance to come in here and ask questions on the Q&As now before the boot camp even start. Right? That's it, man. I'll see y'all when I see you. Everybody that's not in the gang, I'll see y'all Monday at 6 p.m. Eastern Standard Time for the price action recap. Gang, I'll either see y'all Saturday or Sunday. Right? I'll see y'all Saturday or Sunday. Gang, everybody that's in the gang, if the mentees do not have any questions, then we'll do a price action recap Sunday evening, right? Because if they ain't got no questions, you know what I'm saying? If they don't have any questions for the mentees Q&A, then we'll do a recap of the entire week Sunday evening. But if they do got questions, then we just ain't gonna do no recap if I don't get on and do one Saturday, right? That's it. I'll see y'all when I see you. Y'all enjoy the rest of your evening. And remember, man. Oh, let me run my thing one more time. I'm gonna run my promo one more time. I'm Promo McGee. I'm Promo McGee out here. You feel me? All right. Hello, my name is Timothy Lee Rogers Sr. Y'all enjoy y'all rest of y'all evening, man. Gone. Yeah. Hello, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider if you don't hablo español. And I am super excited to announce the Art of Reading Price Section 30-day boot camp. Now, I know you may be wondering, well, Tim, we just had the Art of Reading Price Action mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Action educational material. Phase 2 will begin our tape reading sessions. And Phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And Phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Boot Camp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the Gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current Gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off, and you can use that coupon code up until December the 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider. If you don't hablo español, y'all be safe out in these trade streets, man. Gone.